Have you ever wondered why every time you open TikTok, Discord, or Telegram, you see someone sharing for free those stocks and coins that are about to increase 10 times? Today, I will expose the truth that 90% of social media users have no idea about. You are not the customer. You are the product in the pump and dump 2.0 game. Listen, if you think market manipulation only exists in Hollywood movies with billionaires sitting in luxurious offices, you are completely wrong. In reality, right now, thousands of manipulation groups are operating right on the phone in your hand. They don't need Wall Street. They just need Wi-Fi and a social media account. The truth I'm about to reveal will make you look at every free investment advice online in a completely different way. Because in this digital world, nothing is free, and you're paying the price with your own bank account. Before diving into modern schemes, let's understand how traditional pump and dump works. This isn't new knowledge, but you need to master it to recognize the 2.0 version that's 1,000 times more dangerous. Classic pump and dump has 3 simple steps. First is pump, inflating the price. A group of people with large capital secretly buys into a stock or asset with large volume, driving the price up. Next is hype, creating buzz. They hire media and analysts to spread positive news, creating the feeling of a golden opportunity that everyone must seize. Finally is dump, selling off. When the price is high enough and there are enough small fish jumping in, they sell everything and disappear, leaving the crowd holding losing positions. Sound familiar? That's exactly what happened with hundreds of divine stocks you've heard about in the American market. But that's just the Stone Age compared to what's happening now. The problem with traditional pump and dump is that it's expensive, slow, and easily detected. You need to hire media, need huge capital, and always risk being scrutinized by regulators. But the internet and social media have completely changed the game. Now, with just a few $1,000s and a clever social media strategy, anyone can become a manipulation master without anyone knowing. Do you know why TikTok, Discord, and Telegram became perfect manipulation tools? Because they have 3 characteristics that pump and dump 2.0 operators need. First is terrifying viral speed. A TikTok video can reach millions of views in hours. A message in a Discord group can be read by thousands simultaneously. This speed is faster than any traditional media. Second is zero cost. Creating a TikTok account is free. Setting up a Discord group is free. Sending Telegram messages is free. While traditional media charges thousands of dollars for a PR article, social media allows reaching millions with zero cost. Third is no gatekeepers. No editors reviewing content before posting. No regulators monitoring in real time. You can say whatever you want, pump whatever you want. This is exactly why Pump and Dump 2.0 is 1,000 times more dangerous than the traditional version. It's not just faster and cheaper, but much harder to detect. TikTok isn't just a place to watch funny videos. It has become the most powerful financial manipulation tool on the planet. TikTok's algorithm is designed to create addiction. It learns exactly what you want to see and continuously shows you similar content. If you once click on an investment video, the algorithm will show you hundreds of other videos on this topic. This is exactly the point that manipulators exploit. They create tons of videos, sharing investment experience, technical analysis, price predictions, with one single purpose: pushing you into assets they've already bought. The most popular tactic is get rich from $1 a day. They'll show their phone screen, bragging about hundreds of % profit from one trade, and share secrets with you through DMs. The truth is, those numbers on screen can be easily faked. Those divine trades they show are just demo accounts or edited. The sole purpose is to pull you into their paid groups. Discord was originally created for gamers, but now it has become a paradise for pump and dump. Why is Discord so dangerous? First is fake privacy. Discord servers can be set to private, only invited people can join. This creates a feeling of exclusivity and secrecy, making users believe they're receiving insider information. Second is real-time communication. Messages are sent and received instantly, creating pressure to act immediately with the psychology of buy now or miss the opportunity. Third is hierarchy system. Discord allows creating different roles: admin, moderator, VIP, premium member. This creates a sense of hierarchy, making users believe that people with higher roles have better knowledge and information. The typical operating model of Discord pump groups is first creating a free group with a few hundred members, sharing a few correct signals to build credibility, then creating a VIP group with fees from $50 to hundreds of dollars per month, promising higher quality signals, finally creating an inner circle with fees of thousands of dollars for professional traders. The truth is, in all these groups, the tactics are the same. Admins will pump assets they've bought beforehand, then dump when enough people follow. Telegram is considered safer by many because of its encryption feature, but this very thing makes it a perfect manipulation tool. End-to-end encryption means no one, including governments, can monitor message content. This creates a perfect environment for pump and dump activities without fear of detection. The channel system allows one person to send messages to thousands, even millions simultaneously. Unlike Discord, where you need to join individual servers, Telegram channels can be shared publicly and spread at terrifying speed. The bot system allows automating the entire process, from sending signals to collecting payments to kicking non-paying members. Everything can be automated. This is the part I want you to pay attention to most, because this is exactly how Pump and Dump 2.0 deceives millions of people in the most sophisticated way through influencers, fake experts. Have you ever wondered why successful traders have time to make TikTok videos every day? If they really make millions of dollars from trading, why do they need income from sponsored content? The answer is because they're not successful traders. They're salespeople hired to sell you a dream. The anatomy of a fake crypto influencer happens in 4 steps. First is creating a successful persona by renting a luxury apartment to film videos for just one day, buying or renting expensive cars to show off investment results, creating fake screenshots of portfolios with huge amounts, writing zero to hero bios to create inspiration. Next is building followers by buying views, likes, comments to create fake engagement, collaborating with other influencers for cross-promotion, sharing success stories of students that are actually fake testimonials, creating a sense of community with hashtags and challenges. Third is monetizing the audience through selling courses priced from hundreds to thousands of dollars, promoting coins tokens they've bought beforehand, affiliate marketing with exchanges and brokers, private consultation with extremely high fees. Finally is pump and dump by choosing a coin token with small market cap, buying in with large quantities when price is low, creating hype through technical analysis videos, calling on the community to buy now, dumping when price has risen high enough. The most dangerous technique in manipulators' arsenal is paid promotion disguised as sincere advice. They don't openly say this is an advertisement, but disguise it as personal experience and genuine advice. A typical example is, we just discovered a potential coin with a really solid dev team, very healthy tokenomics. I've researched thoroughly and decided to buy some. Not financial advice though, just sharing. Dior. The truth is, that coin was already bought by them beforehand at cheap prices. Researched thoroughly means they've arranged a deal with the project to promote. Dior is just a disclaimer to avoid legal liability. Red flags you need to recognize include always having disclaimers, not financial advice, but content is very confident, showing screenshots of quick profits from little-known coins, having referral links to support the channel, creating urgency like opportunity only available for the next 24 hours, promising unrealistic returns like could x 10, x 100 times. If you think traditional stock regulation is already difficult, then crypto is the Wild West of manipulation. Why has crypto become the perfect playground for Pump and Dump 2.0? First, the market operates 24/7. Unlike stocks that only open during business hours, crypto trades 24 hours a day, 7 days a week. This means pump and dump can happen anytime, even while you're sleeping. Second, no circuit breakers. Stocks have mechanisms to halt trading when prices fluctuate too strongly. Crypto doesn't. A coin can increase 1,000% or lose 90% of its value in minutes without anything stopping it. Third, anonymity. You can create wallets, buy, sell crypto without revealing real identity. This creates perfect conditions for manipulation activities without fear of prosecution. Fourth, small market cap. Most altcoins only have market caps of a few $1,000,000. With relatively small amounts of money, you can dramatically move the market. A typical crypto pump and dump model has 5 phases. Phase 1 is preparation. Preparing by choosing a coin with small market cap under $10 million, researching the team, tokenomics, social media presence, accumulating position when price is low and volume is small, creating multiple wallets to disguise trading activity. Phase 2 is building hype, creating buzz through releasing research reports about coin potential, creating fake partnership announcements, using bots to boost social media engagement, infiltrating relevant Telegram and Discord groups to spread info. Phase 3 is social media assault, attacking social media through coordinated posting across multiple platforms, influencer promotion disguised as organic content, creating FOMO with limited time offers, using technical analysis to justify price movement. Phase 4 is the pump, inflating price through simultaneous buy orders to drive price up, creating fake volume with bot trading, continuous social media pushing, targeting specific price levels to trigger FOMO buying. Phase 5 is the dump, selling off by gradually selling position when price reaches peak, using multiple wallets to avoid detection, continuing promotion to maintain buying pressure, completing exit before price collapse. Although not pump and dump in the traditional sense, the case of Dogecoin and Elon Musk is a perfect example of the power of social media influence. With just a few tweets, Elon Musk can drive Dogecoin price up hundreds of % in hours. This shows one person can control an entire market. Social media is a weapon of mass market manipulation. Retail investors are the main victims in this game. If one tweet from Elon Musk can create billion-dollar market movement, imagine what could happen when there's an organized group with strategy and multiple platforms to execute plans. Now that you understand how Pump and Dump 2.0 operates, it's time to learn how to protect yourself. These aren't generic advice you usually see, but practical techniques from experience of people who've been burned in this game. The red flag detection system has 3 levels. Level 1 is content analysis, urgency language like right now, finally, only a few hours left, unrealistic promises like guaranteed profit, risk-free, X 10 times in a month, vague technical analysis like according to technical analysis, chart patterns show without specific details, emotional manipulation like you'll regret if you miss, opportunity of a lifetime. Level 2 is account analysis, creation date of newly created accounts, but with unusually high followers/engagement, content pattern only posting about investments without personal content, engagement quality with generic comments lacking substance bot-like patterns, cross-platform presence with same content posted simultaneously on multiple platforms. Level 3 is technical analysis. Volume anomaly with sudden volume spikes without news catalyst, price patterns with pump patterns having small sell-offs, wallet analysis with concentration risk, few wallets holding large percentages, market timing with promotions coinciding with unusual price movements. Protection strategies include 3 main strategies. Strategy 1 is information is power. Never act on information from social media alone. Cross-check multiple sources before making decisions. Understand the difference between organic hype and manufactured hype. Follow money flow, not words. Strategy 2 is position management. Never FOMO into a position. Always set stop loss before entering. Size positions appropriately. Never bet money you can't afford to lose. Diversify across time. Don't put all money at the same time. Strategy 3 is psychological defense. Recognize and resist FOMO triggers. Question motivations of information sources. Maintain long-term perspective. Don't let emotions drive investment decisions. To truly protect yourself, you need to understand the psychology behind why Pump and Dump 2.0 is so effective. This isn't just about technology or financial markets, but about human psychology and how the brain functions. FOMO isn't a simple emotion. It's an evolutionary response developed to help humans survive in prehistoric times. When seeing tribe members rushing toward a food source, brain instinct is to follow immediately without analysis. In modern context, when seeing everyone rushing into an investment opportunity, the same instinct gets triggered. Social media amplifies FOMO effects through algorithm design because platforms want users to spend more time, so they prioritize content, creating strong emotional responses. Social proof when seeing others make money triggers competitive instinct. Instant gratification because unlike traditional investments, crypto can give immediate results. And 24/7 availability because markets never sleep, so FOMO can be triggered anytime. Neuroscience behind FOMO includes dopamine release, when the brain releases dopamine when anticipating reward, not when actually receiving reward. Loss aversion, when fear of missing out is stronger than joy of gaining. Social comparison, because humans constantly compare themselves with others, especially peers. Herd mentality evolved as a survival mechanism in dangerous environments. Following the crowd often means safety. In financial markets, herd mentality often leads to disaster. Digital platforms enhance herd mentality through echo chamber effects when algorithms show similar content, creating illusion of consensus. Visibility bias, when success stories are shared more than failure stories. Social validation, when likes, shares, comments create false sense of approval. Influencer authority, when people transfer authority from traditional experts to social media influencers. Pump and dump operators exploit many cognitive biases, including confirmation bias, when exploiting people's tendency to seek information confirming existing beliefs. If you already believe crypto is the future, you'll be more likely to accept information supporting that view. Authority bias, when people tend to trust information from perceived authority figures. Social media influencers with large followings are perceived as experts even without real credentials. Recency bias, when recent events have disproportionate impact on decision-making. If you recently saw someone make money from crypto, you'll overweight the probability of success. Anchoring bias, when the first piece of information received disproportionately influences subsequent judgment. Pump operators often anchor with extremely high price targets to make moderate targets seem reasonable. After going through all this analysis, you might feel overwhelmed or paranoid about every investment advice on social media. That's not my purpose. The goal is to equip you with knowledge and tools to navigate the digital investment landscape safely and informed. The bottom line up front is Pump and Dump 2.0 isn't an upgrade of the traditional version. It's a completely different beast. It's faster, cheaper, more widespread, and harder to detect. It doesn't just target professional investors, but aims at the general public through social media platforms we use daily. The core truths you need to remember. First, there's no free lunch in financial markets. If someone shares exclusive tips with you for free, they have hidden agendas. Second, social media influence doesn't equal investment expertise. Large following doesn't mean accurate predictions. Third, urgency is the biggest red flag. Real investment opportunities don't need you to rush. Fourth, your money is the target, not your success. Manipulators don't care whether you make money or not. They only care about transferring money from your pocket to theirs. If you find this information useful, please share to help awaken more people. Don't let them continue deceiving and exploiting naive investors. Knowledge is the most powerful weapon against manipulation, and now you're fully equipped to protect yourself in this battle. Remember that in the investment world, skepticism is your best friend, and do your own research isn't just a slogan, but a survival skill in this digital age.